Ever wondered how everyday people can build wealth from their living rooms? Welcome to the world of stock investments. Imagine a bustling marketplace, but instead of buying fruits and vegetables, you're buying pieces of companies. That's the stock market for you. A dynamic place where shares of public companies are bought and sold. It's like having a tiny slice of a big business pie, and as the business grows, so does the value of your slice. The allure of the stock market lies in its potential to turn modest savings into substantial wealth. It's a field where patience meets opportunity, and where informed decisions can lead to financial growth. Whether it's a tech giant or a startup poised to disrupt the market, every share offers a stake in a company's future. But what makes the stock market truly fascinating is its accessibility. With just a few clicks, you can start trading from anywhere, anytime. So, how do you get started with something that sounds so lucrative? Let's dive in. What exactly are stocks, and why do people buy them? Well, imagine owning a piece of a thriving orchard. The better the orchard performs, the more fruits you get. This is essentially what happens when you buy stocks, or as they're more formally known, shares. When you purchase a stock, you're buying a small piece of a company. This doesn't mean you can walk into their offices and start bossing people around, but it does mean you own a fraction of everything the company owns. Think of it as having a tiny slice of every desk, every product, and potentially every penny of profit. But why do companies sell stocks? Companies issue stocks to raise money. Instead of taking out loans from a bank, a company can sell shares to the public. This way, they get the capital they need to grow. And in return, you, as a shareholder, get a chance at earning a share of the profits. This is often paid out in the form of dividends, or by selling the stock at a higher price than you paid. Now, how do shareholders benefit when the company performs well? If the company's doing great, innovating new products, expanding into new markets, or just increasing their sales, the value of the company increases. As the company's value grows, so does the value of your shares. This could mean, if you decide to sell your shares, you could sell them for more than you paid. It's like buying a piece of art. Its value might increase over time, and if you choose to sell, you could make a profit. However, if the company doesn't perform well, the value of your shares might decrease. Owning stocks is a balance of risk and reward, and understanding this balance is crucial. Now that you know what stocks are, let's understand the benefits they come with. Buying stocks isn't just about owning a part of a company. It's about stepping into a realm of financial opportunities that can enhance personal wealth and provide financial security. Let's dive into some of the key benefits of owning stocks. Firstly, there's the potential for dividends. Dividends are essentially your share of a company's profits, distributed periodically to shareholders. It's like receiving a thank you note from the company, but instead of words, it's cash. This can provide a steady income stream even if the stock's price isn't climbing. Then there's stock price appreciation. If the company thrives, the demand for its stock typically increases, which can boost the stock price. This means that the value of your investment grows, allowing you to sell your shares for a profit in the future. Additionally, owning stocks can offer potential tax benefits. Certain dividend incomes and long-term capital gains may be taxed at lower rates than regular income, making stocks a tax-efficient investment. With these benefits, stocks offer more than just ownership, they offer potential gains. Ready to trade? Let's talk about how you actually buy and sell stocks. First off, to participate in the stock market, you need a brokerage account. Think of a broker as your access pass to the trading floor. Brokers can be traditional, where you might receive advice and have a broker execute trades on your behalf. Or they can be online platforms that allow you to trade with just a few clicks or taps. Once you've chosen a broker and set up your account, the next step is understanding where these trades happen. That's where stock exchanges come into play. These are the venues where stock buyers and sellers meet, though these days it's all done electronically. Major exchanges include the New York Stock Exchange and the NASDAQ. Each has its own set of listed companies whose stocks are traded. Now let's dive into the trading itself. Imagine you've done your research and decided to buy shares of a particular company. To do this, you would log into your brokerage account and place a buy order. Here you can specify how many shares you want and at what price. You can opt for a market order, which buys at the current market price, or a limit order, where you set the maximum price you're willing to pay. Selling shares works in reverse. When you feel it's the right time to sell, perhaps because the share price has risen to a satisfactory level, or you want to cut losses, you enter a sell order. Again, you can choose between a market order or a limit order, depending on whether you want to sell immediately at the current price or wait for the price to reach a certain point. It's crucial to monitor your investments regularly and stay informed about market conditions and company performance. This proactive approach helps you make more educated decisions on when to buy or sell. With these tools, you're ready to start trading. But when is the right time to buy or sell? Timing is everything in the stock market. That's a phrase often heard echoing through the corridors of Wall Street. But what does it really mean to time the market? Let's dive in. The art of buying or selling stocks at just the right moment hinges on strategies like fundamental and technical analysis. Fundamental analysis involves evaluating a company's financial health, market position, and potential for future growth. It's like checking the engine of a car before you buy it. On the flip side, technical analysis focuses on statistical trends from market activity, such as past prices and volume. Picture a meteorologist predicting weather patterns. It's all about spotting trends. However, here's a word of caution. Timing the market perfectly is a notoriously tricky endeavor. Many seasoned investors argue that it's not just about when you buy or sell, but also about holding steadfast during market ups and downs. So, while it's tempting to think we can always buy low and sell high, remember that even the most skilled traders can't predict market movements with complete accuracy. While timing isn't everything, it's an important part of your strategy. Every investment comes with its risks and rewards. Diving into the stock market is akin to setting sail on a vast ocean. It's thrilling, yet unpredictable. The market's volatility can mean the potential for high returns, but just as easily, it can lead to significant losses. This is the dual nature of stocks. They can propel your portfolio to new heights or challenge your financial stability. Why such fluctuation? Stocks are sensitive to a multitude of factors: economic changes, political events, and even investor sentiment. This sensitivity fuels the market's daily ups and downs. For instance, a positive earnings report from a major company can send stock prices soaring, while a geopolitical tension might trigger a sell-off. Effective risk management is therefore not just beneficial, it's essential. Diversifying your investment portfolio, understanding your own risk tolerance, and setting clear financial goals are foundational strategies to navigate these waters. Understanding these risks is crucial to being a wise investor. Feeling ready to make your first stock investment? Diving into the stock market can seem like navigating uncharted waters, but it doesn't have to be intimidating. Starting with a modest amount can be an excellent way to get your feet wet. Let's walk through how to begin this exciting journey. First, education is key. Before even looking at potential stocks to buy, understand what makes a good stock. This involves some groundwork, but it's less about complex charts and more about understanding a company's role in the market, its financial health, and its potential for growth. Resources are plentiful, from books and online courses to financial news on the latest market trends. Once you've got a grasp on the basics, the next step is choosing where to invest. For those just starting out, consider a stock mutual fund. These funds allow you to buy a basket of stocks, which are selected and managed by financial experts. This diversifies your investment and reduces risk, making it a safer bet for your first foray into the market. Now, how do you actually make the purchase? Online trading platforms have made buying and selling stocks more accessible than ever. Many of these platforms offer user-friendly interfaces and even educational resources to help you make informed decisions. Setting up an account is typically straightforward, and many platforms offer the option to practice with virtual money before you commit real funds. Consider also consulting with a financial advisor. A professional can offer personalized advice tailored to your financial situation and goals. They can help you navigate the complexities of the market and devise a strategy that suits your risk tolerance and investment timeline. Remember, every investor started somewhere, and it's okay to start small, whether it's a few shares of a single stock or a small position in a mutual fund. The important thing is to begin. Starting small is a great way to enter the market confidently. Let's recap what we've covered about beginning your journey in stock investments. The stock market is a dynamic arena where shares of public companies are traded. Understanding what stocks are is fundamental. Remember, a stock represents a piece of ownership in a company, making you, the shareholder, a partial owner. The benefits of owning stocks include potential capital gains, dividends, and the power to influence company decisions through voting rights. It's a pathway to building wealth over time, given the historical rise in market values. When it comes to buying and selling stocks, the process has been greatly simplified by online brokerages. You can buy stocks with just a few clicks. But the key is knowing when to buy and when to sell, which requires a grasp of market timing and an acceptance of the risks involved. Managing these risks is crucial. Diversifying your investments can help mitigate losses and protect your portfolio from volatility. Armed with this knowledge, you're now ready to start your investment journey. Happy investing!